Welcome everyone to the CFO Swinger Watch Report technical analysis video for the week of December 9th through 13th. Now, if you guys want to know the top-down approach to how we generate the following actionable swing trade ideas, make sure you guys read the entire report first before you watch this technical analysis video. The following research provided in this week's report is to be applied to the given trade ideas so that you can execute without worry as long as you follow and act on the entire 3-point game plan to a T, which is also given to you in great detail. With that, let's get into the markets. So the S&P 500 ETF, or ticker symbol SPY, has yet again hit a new all-time high price print of $609.07. We are so close to the next major whole number level of $610. That's right. We have nearly moved 10 points since we've reached this whole number level of $600. What a milestone. Now, I'm going to give it to you guys straight. There is an ideal scenario that I really want to see occurring for the overall markets as we head into the monthly OPEX of December, which is December 20th. So for the S&P 500, I would love to see the price moving sideways for most of this week and into next week. And I would like to see a small pullback as we head into the monthly OPEX. And the reason being is that once the monthly OPEX is over and it's done, all said and done, I would like the markets to finally have its one last rally, the Santa Claus rally, after the OPEX as we head into the end of the month and into the very first few trading days of January. So I would love to see, again, as a quick summary, sideways price action, preferably between 600 to 610. Again, it's a wide range because this is going to encompass about 2 weeks worth of price action. And during that sideways action, we want to see that pullback, ideally, back to the $600 level and use it as a new level of immediate short-term support. And while that happens, we get closer and closer to the monthly OPEX date of December 20th. And once that is over, we can have a very strong pivot back up higher and possibly continue to hit new all-time highs, further extending this rally into the end of this year and into the very first few trading days of January. All right. Now, before we delve deeper into the market, here is a quick tip worth remembering or even worth writing down right now. So during bull markets, you want to try to milk the returns of a bull market by outperforming the overall markets. Because if that's not your goal, then what is the true purpose of trying to generate P&L or profits while spending all that time studying and looking at the charts? So considering this outperformance, it's best to be overly exposed or concentrated to the leading sectors of a bull market. And currently, those specific sectors are heavily focused in the overall tech sector. It's a singular sector that everyone is watching. But remember, the health of a bull market is mostly centered on healthy sector rotations where we see each individual sector seeing overall bullish momentum and experiencing exceptional returns for the overall duration of that rotation. So, your holdings should always be concentrated in the leading sectors like tech during bull markets, but you should simultaneously not be surprised when your portfolio decides to underperform the markets for a couple of days, weeks, or even a few months during that duration of a healthy sector rotation. And that is why we need to dive deeper in the health of the market. And this is RSP, or the equal weighted ETF of the S&P, where all the holdings are basically equally sized, no matter the market valuation or the size of the companies. Now, what you're seeing here is the weekly time frame of RSP, ticker symbol RSP. And it's quite interesting because the overall benchmark markets, the S&P 500 ETF right here, or even the index, has been moving straight up and higher. But the equal weighted has paused its uptrend last week and has actually broken below this previous week's lows, closing near that new lower low. And this is interesting to see for me because we know that mega cap tech stocks, or like the individual Max 7 stocks, have been leading this entire market rally to the upside. But it seems like the rest of the markets seem to have paused here, even pulling back from the momentous run up higher. Now, of course, this is simply sector rotation that we are seeing once more, but the volume on last week's candlestick here is telling you that something more is occurring under the hood of this current uptrend. So, in conclusion, this is most likely one of the few early warning signs that the market is heading towards an overextended and overbought condition. So remember this, guys. Now, when it comes to the topic of internal rotation, so not like sector rotation, internal rotation, like in the leading groups, we have extensively talked about the rotation occurring between the software and semi groups, which embody the entire tech sector. This was mentioned months ago. So this internal rotation is the main reason why I have focused so much more on ticker symbol IGB for the last few months compared to ticker symbol SMH. And you can clearly see here that IGV has been leading the overall tech sector compared to the lagging SMH, which has not been doing too much for a couple of months here. And so I've proposed an explanation as to why this is occurring during last Thursday's live stream on ticker symbol AMD, which is one of the leading semiconductors. So make sure to watch it, as I will have it linked down below in the description box. With that, let's get right into the 2 swing trade ideas that I have for you all. Remember, read the complete analysis given in the report first before you watch the additional technical analysis on this video. So your first swing trade idea is ticker symbol ZS or zscaler. So this is yet another software company, but something looks a little awry. Why? Well, if you take a look at IGV on the weekly time frame, which again I've shown you guys a few minutes earlier, software has been leading the markets and pushing up higher into new all-time highs. This is clearly observable on the weekly time frame. But when you compare this weekly time frame chart of IGV to ZS's weekly time frame chart, you can clearly see that ZS is a complete software laggard. And that is the major reason why we need to take a look at this name this week. Now, the overall technical analysis is pretty simple, so let's go over this fairly quickly. So ZS has been making a large macro rounding bottom, which tends to form at the end of downtrends, And during this duration of this rounding bottom, it has formed a very nice neckline level of resistance at the whole number level of $203 right here, or this yellow line, which I'll highlight. Okay, and this 203 neckline resistance level is particularly interesting to me because for the last 3 weeks, including last week, the price has been attempting to try to use this level of resistance as a new level of support since 3 weeks ago, the price broke over it. Now, with this breakage over $203, there has been a lot of struggle for the bulls because if you go on the daily time frame, okay, the last 3 weeks or so, the volume has been very, very low. Even if the price had continued to defend this $203 level as a new level of support, the bulls lost it during the earnings reaction that it had 4 days ago. Okay, so Tuesday of last week. Now, what's amazing here is that right after the earnings day reaction, okay, the very following day, we saw a large pivot back up higher and another breakage over this $203 level of resistance, and it turned it into a new level of support again. Now, this is surprising because this is all from lower volume compared to the actual earnings day reaction day's volume. All right, so huge amount of volume on Tuesday, and then a significantly lower volume on Wednesday, but that allowed the price to break over this candlestick's highs and closed much higher compared to the closing price of this day. Now, this tells me that bulls are really, really willing to try to stay over this $203 level of new support. And while this was happening, on the other side, on the flip side, while the price was trying to stay over this $203 level of support, the price was also being rejected at the ceiling here, at the levels of resistances. And we've made 3 peaks so far, including last Friday. And these 3 peaks have created a nice micro descending level of resistance that we need to see a breakage out of if we are to continue to break away from this previous neckline level of resistance at $203. And that is why I have given you guys a long entry point over $215.10, which will officially confirm that the price is breaking over this descending resistance trendline and will be over last Friday's high of $215.14. Okay, now obviously it's not literally over, but I want to make sure that we're looking at a round number of $215.10 and not worrying about whether it's going to be 15 cents, 14 cents, 13 cents. I just want to be slightly early and also confirming that the price is trying to break over this 215 whole number level and also over this descending resistance trendline. So don't try to look into the math or any of the numbers or the cents too much. Just focus simply on the fact that if we are able to get over this 215.10, then most likely we'll be getting a move over last Friday's high of 215.14, and eventually we can hit our very first price target of $220 as seen here. Now, if you guys want the full complete analysis, again, read the report first before you watch this video. And last but not least, we have our second swing trade idea for this week, ticker symbol PSTG or Pure Storage. First off, this stock was initially noted by me back in mid-2022 because of how resilient and relatively strong it was compared to the overall bear market conditions. And as seen here on the weekly time frame, that strength transferred into the following year of 2023 as the price began a large uptrend right around here, in which 2024 became the continuation of that newfound uptrend right around here. And as seen here, this year I gave you guys a swing trade idea on PSTG around early May with an entry point over 54.50 because I was looking at this specific whole number level of resistance at $55. Now let's look at the current price action. So last week, obviously, we had a huge week thanks to its earnings report and massive earnings move to the upside. All right, the reaction was absolutely bullish. There's no denial about that. And based on this weekly time frame and this weekly candlestick, the price is looking to go much higher and is looking to hit new all-time highs in the weeks and months to come. Now, before we delve deeper into the price action that happened last week, let's take a look at the previous few months. So PSTG was relatively strong once again during the very quick pullbacks that we saw in the market, the very quick corrections in the market back in August, September, and even in October. Because when PSTG began to move lower with the markets in the month of August, we saw PSTG earnings also contributing to the move lower. But during this overall move lower in the summer months, the price came right back down to retest the weekly 50 SMA, a major area of SMA support on the weekly time frame and from a longer term perspective. And while it hit this weekly 50 SMA, the price came back down to retest my major weekly level of support at $48.50. And if you take a look in the past year, back in May, when we were taking a look at this one, 48.50 was also a major level of support for this very nice macro bull pennant or bull flag. And obviously, the price decided to undercut 48.50 and the weekly 50 SMA, but due to the strength and resiliency of the buyers, the price quickly came right back up over the 48.50 level and over the weekly 50 SMA. Now, this is important to know because this undercutting action of the price has allowed the price to form what we like to call a double bottom chart pattern. So as seen here on the light blue arrows, we have the first bottom here, and then in the following few months, okay, we got our second bottom here as highlighted by this second light blue arrow. And the price was able to come back down to retest the previous pivot low point at this first lower low here. And on this second lower low, we got a higher low here compared to this previous lower low pivot point. And ultimately, the price was able to come back and retest the major level of resistance that I previously mentioned at $55, which now brings us to last week. So the earnings reaction has allowed the price to jump up higher and break over this $55 level of resistance finally. And if you go on the daily time frame, the price opened and blasted over the next major level of whole number resistance at $60. And in fact, it used the $60 level of previous resistance as new support on the earnings reaction day. Now, the reason why we need to be looking at this name this specific trading week is that the price action is so textbook and perfect right after an earnings reaction. Why? Well, if you take a look on Thursday and Friday, the price has allowed the price to, itself, to tighten up really well, resulting in back-to-back consecutive inside daily candlesticks. And this comes right after a very nice massive move up higher that resulted in a day of 22.06% return on Wednesday. Now, if you go even smaller on the time frame, okay, on the lower time frames here, we can clearly see that the price began to consolidate right after Wednesday's massive move up. And this consolidation has resulted in the price moving in a very tight manner to form a very textbook intraday wedge chart pattern. Now, for me, from a macro perspective, I would like to call this a bull pennant because the flagpole that we see here consists of this massive gap up along with the actual price action trading that we saw on Wednesday. And then the flag comes from this wedge chart pattern, which is now a micro wedge chart pattern to contribute to the overall macro bull pennant or bull flag that we see here. And again, just as a reminder, bull flag, bull pennant, they mean the same thing. They are synonymous words. They're all pointing for a move much more higher if we do see the price breaking over its major resistance level. So the play at hand for us this week is a simple breakout over this bull flag's descending resistance trend line, which will be around $66. So this whole number level of resistance at $66 or at this intraday level of $66, and our confirmation entry point will be over $66.10. Now, the first initial price target for PSTG will be coming up very, very quickly if we do see a volume-backed breakout over $66.10 because it will be at the all-time high resistance level of $68.50 or a range of $68.50 to $69. Okay, now again, I wouldn't be surprised this week if PSTG decides to make a new all-time high price print compared to the current all-time high price print of $70.40. I have given you guys all the price targets and stop losses and all the other important and crucial pieces of analysis in the report itself. So make sure you guys read the complete analysis on the report first. All right, that is it for this video. If this technical analysis video was very, very insightful and applicable, make sure you guys leave a like down below. And if you aren't subscribed yet to the channel, make sure you hit that subscribe button. Now, if you're watching this video when it just became public and you want to watch this video a day earlier when it's private, all you need to do is become a member of the many readers of the CFO Swinger Watch Report and become a private member of the private CFO Discord community. You can get 50% off for your first 30 days. It's a first come, first serve basis. So all you need to do is DM me on Instagram at ChartsFocus1 to claim your spot. I can 100%, maybe 1000% guarantee that you guys will not regret making this decision to become a reader and a private member of the CFO Swinger Watch Report and the private CFO Discord community. Good luck, and I'll see you all tomorrow morning.